Well, good morning, traders, and welcome to another week where today I'm going to take you through the markets. We are going to have a look at what trading opportunities await us, and we're even going to see if we can potentially identify some trade setups. As always, I'll be your host for today. My name is Francois Duplessis. I'm one of the market analysts here at HFM, and I'm coming to you today from Rustenburg, where we had our event this Saturday, hence my beautiful nature background. So let's jump right into it. Let's get into the session. So what is our biggest event that is taking place this week? Hands down, this will be the interest rate decision. So the Federal Reserve interest rate decision that will be taking place on Wednesday. Now, if you are in South Africa like me, this will happen around 8 p.m. So that'll be at 8 p.m. South African Standard Time, where we will see the release of the interest rate decision, where we are currently expecting a minimum of a 25 basis point drop. Now, there's also a very big opportunity that we will see a 50 basis point drop in the markets. Now, if this specifically happens, we could see a massive spike in assets such as gold, even EURUSD, and we could potentially even see a big spike in our stock market. Hence why today we are going to have a look at EURUSD, gold, and NASDAQ 100. So let's get straight into those charts. Let's start looking for some trade opportunities. So here we go, starting with EURUSD. Now here we can see that EURUSD has already spiked quite a bit since last week and broke that resistance that has now become support. So what am I waiting for in the interim? Well, I'm basically waiting for this to spike up to that 61.8% Fibonacci retracement level. And if we can get a good rejection on that, I'm going to look for a very intraday position back down to our support here at 1.111. And then once that gets retested, I'm going to basically just wait for that sniper entry on Wednesday, where if we see that drop in interest rates, we will probably see a massive spike, breaking resistance, and even potentially coming all the way up here to retest these previous high points and maybe even push all the way higher. Looking at gold, on the other hand, gold has been extremely bullish. And as you can see on the chart, I'm not even joking on this. This is the 4-hour chart, and look how absolutely ginormous that spike is that we have seen since last week. Well, not even last week, the week before, Friday, where we had NFP. NFP was around this area over here. So here was my NFP setup. If you joined me for that live trading session, you would remember it was absolutely fantastic. We made some good profits. We had this beautiful setup, dropped all the way down to there. And then from there, it just basically kept retracing. Even after last week's CPI, PPI data, this thing has just kept pushing higher and higher and higher, and is now basically rejecting that 123 Fibonacci extension level. So what am I now waiting for on this one? One of two things. I am not under any circumstances looking at selling gold right now, okay? Because especially with the narrative that the Federal Reserve is going to start looking at decreasing interest rates from Wednesday, this will just add to gold's bullish momentum. So for me, I am not looking at shorting this asset at this specific point in time. What am I looking for? If this thing does retrace, and I know this is a big retracement, traders, don't get me wrong, but if this thing retraces and comes retest this previous support level, this would be the most ideal buying entry level for me. Anything from 2,535 would be absolutely perfect. On the other hand, if we break this 123 Fibonacci extension level, I am going to start looking for higher positions, especially for buys up to our next fib level, which would be around that 150, which is obviously, as you can see here as well, quite a bit higher, which is around that 2,680 level, which is almost $100 extra on gold. Absolutely massive. But again, if we do get that breakout of the 123 Fibonacci extension level, and obviously we need that confluence with regards to the interest rate decision on Wednesday. But if we have both, that's my next aim personally that I will be looking for. Finishing things off for today with NASDAQ. So NASDAQ, again, yes, last week as well, came all the way down, bounced on that support around 18,500 and is now trading very, very nicely just beneath our resistance level at 19,500. Now again, two things. As you can see here at the moment, on the 4-hour time frame, our stochastics is very, very nicely overbought. Okay. That being said, so what can I look for in this? If we are going to look for a dip and then a buy, based on the stochastics here at the moment, we could potentially look for some short positions back to this previous low here at around 19,020, 19,000 flat. Again, so that's kind of the intraday leading up to Wednesday trade that we could potentially trade. We can see some markets pulling back from there. Alternatively, if we don't see this break a little bit lower, and for me as well, entry wise, where am I looking at entering? I'll be looking at entering under 19,400. Okay, because then we can see the structural then break under 19,400. We can look for that entry all the way back down to 19,000. If that doesn't happen and we break above these previous high points that we have over here, which is around 19,625, then I'm definitely going to start looking for some buying positions, looking to trade this all the way up to our next resistance and look for those next new higher highs on NASDAQ. And then traders, that is it from me for today. I do hope that you found this session beneficial, and I do hope to see you in our next live trading session. And always remember, trade safe, be smart, and I'll see you again next time. Thank you very much for joining. Bye-bye.